Here in the United States, most of our individual income tax is determined off of a progressive tax rate schedule. I say most because there are other types of income that will have different methods of determining tax, such as when you have a long-term capital gain income. Now, most taxpayers will be able to determine their tax by using the tax tables provided by the IRS. But the purpose of this video is to demonstrate how your tax liability is calculated using the tax brackets. So what is a progressive tax? This generally means that as your income rises, certain parts of that income will be subject to a higher tax rate. Essentially, your income is taxed in batches. The first batch of income will be taxed at 10%, the next batch at 15%. After that, it moves to 25%, 28%, 33%, 35%, and finally 39.6%. Now, if you hear that someone is in the 39.6% tax bracket, you would be incorrect to think that all of their income will be taxed at that rate. Allow me to use a quick visual example of how this works.
So this example is based off of the married filing jointly tax brackets, and we're just assuming that the taxpayer is married and a joint return will be filed. The combined taxable income of the household is $550,000. So the boxes or buckets represent the tax bracket, while the percentage above each box represents the tax rate within that bracket. These amounts represent the range of income in each bracket. So the next step would be to disperse the $550,000 of taxable income to determine the tax liability. In order to do that, we need to fill up each bucket. When the bucket is full, we move on to the next bucket until all of the taxable income has been used up. So here would be a visual shot of dispersing all of that income. The numbers in the middle of each box represent the amount of income that will be taxed in each bracket. So as you can see, all buckets have been filled with the exception of the last bracket, where the remaining $85,149 of income will be taxed. The next step is to tax each bucket by the tax rate for that bucket. So the red amounts are the result of multiplying the tax rate by the number in the middle of the bucket. To determine the total tax liability, all of the red amounts are added. When all of the red amounts are added up, the total tax liability comes to $163,714. And then to determine an effective rate, take the tax liability and divide it by the taxable income. In this case, the effective rate is about 30%.
So if you hear someone is in a certain tax bracket, remember that not all of their taxable income will be taxed at that rate. Only a portion of their income will be. Hopefully this video was helpful in giving you an understanding of how our progressive tax system works on our individual income tax returns. If you have additional questions, click here to book your free, no obligation consultation. Also be sure to sign up for our monthly newsletter and subscribe to our YouTube channel for weekly updates. If you have a tax question you would like us to answer, please leave it in the comment section below. Thank you.